Hi there, so in this video I'm going to show you how to trade using moving averages. Before I do that, I'm just going to explain briefly what exactly moving averages are. So a moving average is a technical indicator that plots the average of the price over a period of time. A moving average is recalculated at each consecutive point in time. The effect is to produce a line that smooths out fluctuations in the original price data. So effectively what that means, guys, is that a moving average is the average closing price of the previous X number of periods. So for example, if you were using a 10-period moving average on a 1-hour time frame, this would represent the average closing price of the price of the asset for the previous 10 hours in time. So what does this actually look like? Well, it's going to be a lot easier for me to show you actually on the trading platform. So let's go to the platform and then I'll show you how to put your moving average on the chart, and also I'll show you a couple of methods for trading this strategy. So first of all, you just need to add the indicator. So right click on your chart, go to add indicator, and it'll bring up your list here, and you have a few different types of moving averages listed on here. The ones that you want to be looking at are your simple moving average and exponential moving average. Now the simple moving average is what it says, the average price for the last number of periods. The exponential is the weighted price calculation for the last n number of periods. So that gives a stronger weighting to the most recent time period, so that can be slightly faster reacting. For now though, we'll just use our simple moving average. So click on the simple moving average, click OK, and then over here you set your parameters. So you can choose the number of periods on the moving average, and there's so many different possible settings here. It's untrue, you just need to find what's good for you. But let's just say for now we're going to put a 50-period moving average on our chart. You can change the color, etc. here, so just click there and then choose the color you want. You can change the thickness of your line here as well to make it more apparent. Just click OK and it will put this line on your chart. So this is the average closing price of the previous 50 hours of trading. So we're an hourly time frame, and this line represents the average closing price of the previous 50 hours of trading. If we just zoom out a little, and you can see that in more detail. So now we can see the moving average here. I'm going to show you a few examples of strategies that you can use to trade with moving averages. Firstly, you can simply say, well, if the price closes below my moving average, then I'm going to sell, and if my price closes above my moving average, I'm going to buy. Now if you're going to do that and you said, right, price closes below my moving average, I'm going to sell, the only safe place is going to be to have your stop loss above the last swing high, or at least above the moving average, and then you'd be targeting kind of 1 to 2. So whatever your stop loss is, double that, and that's your take profit target. And then you probably want to set a trading stop so that it banks your profit as it goes in your favor. Now when it closes back above the moving average, you do the same thing, set your stop loss just below there and set your take profit at twice the stop loss, and you can see the price traded higher from there. And it closed below the moving average again, you can set your stop loss just above, and the price did trade lower from there. You did have the odd occasion where the price closed back above and then back below, and that can happen in ranging markets, so it doesn't work all of the time, but that's the first way that you can trade it. Secondly, we can use our moving average as a level of support or resistance. So you can see back here that the price actually found resistance at the moving average and then it sold off. So you could have said, right, price is finding resistance at my moving average, I'm going to sell it now, stop loss just above, and then take profit of 1 to 2. Back here it did find a bit of resistance initially and sold off, but then it broke above and then it broke back below again, so that wasn't perfect. Down here it did find support by moving average, so you could have bought it here, stop loss just below, take profit 1 to 2. Again over here, found some good support at the moving average, you could have bought it here, stop loss just below. In this occasion there was a big spike and that probably would have taken you out of the trade. Again over here, resistance at the moving average, it sold off from there. Again here, resistance at the moving average and it sold off from there. So that's the second way that you can trade it, is to effectively use your moving average as a moving level of support or resistance. The final strategy I want to show you is one that I personally use on a daily basis, and this is what I call a moving average crossover strategy. And essentially what we're going to be doing here is putting a faster and a slower moving average, so two moving averages on our chart, and we're looking for the faster moving average to cross the slower moving average in order to identify a change in the direction of the price. So let's just remove this moving average for now. So you right click, remove indicator, and I'm going to put the euro dollar on a 5-minute time frame, and I'm going to add two moving averages. So the first moving average I'm going to add is an exponential moving average this time. So double click, and I'm going to use a 10 period exponential moving average. Let's just make that line a little thicker for you. So this is going to be our faster moving average, the 10 period moving average. Then you right click again, add indicator, and this time I'm going to put a 50 period exponential moving average on there. We'll change the colour so we can tell the difference between our two lines. Change the thickness, click OK, and now we have two moving averages on our chart. Let's zoom in a little so we can see this better. Now this strategy will work best on something like euro dollar, one of the major currency pairs, and it works on a 5-minute time frame, and it works best during the European trading session. That's important because overnight in Asia there's not so much trading happening on these pairs and the markets will range, and in ranging conditions this strategy won't work so well. The purpose of it is to try and catch the direction for the day. Now what we're looking at is we're looking for our faster moving average, so in this case the kind of turquoise line, to cross below or above the slower moving average, so the dark blue line, and when that happens we trade in that direction. So this morning we've had a cross over here. You will get this quite often, like I say, before the European markets open. So at the time of recording this it's just gone 7:30 in the morning, so this is a good time to be entering this trade. So we would buy it now, put our stop loss just below, and we'll target 1 to 2, and we're trying to catch the direction for the day. And you can see it happened back here, moving average cross below, you would have sold it around here, stop loss just above, and you would target 1 to 2. This was all overnight, so this got a little bit choppy, but yesterday when we look back we can see it happened here, crossed below, sold off, crossed above, price traded higher. So you do get quite a few opportunities on this, and it's really good for trying to catch those sort of 20-30 pips on a daily basis and to catch the direction for the day. So you're looking for your faster moving average to cross above or below your slower moving average, and you trade in that direction. So I hope that gives you a good introduction into trading with moving averages and some ideas for how you can use them in your trading strategies. Of course, if you have any questions or need any additional support, please do get in touch with your account manager here at SGX Markets in London. That's it from me for now. Stay safe in the markets, and I'll speak to you soon.